Good day and welcome to the SNN Network Summer Virtual Events. Our next presenting company is ElectraMeccanica. It is now my pleasure to turn the floor over to Val Buehler, Chief Financial Officer and Board Member of ElectraMeccanica. Ma'am, the floor is yours.
Thank you so much. Welcome and thank you everyone for joining me today at ElectraMeccanica's virtual presentation. As most of you might know, ElectraMeccanica is a Canadian designer and manufacturer of electric vehicles. We are the new future of transportation. My name is Val Buehler. I'm the Chief Financial Officer and Board Member of ElectraMeccanica, where I've been here for just over 2.5 years now. A little bit about myself. I've got my designations in both accounting and in risk management and have over 25 years of experience in both publicly traded and private companies where I've either owned or ran at an executive level or board level. So just a little bit about some of the industries I've been involved with is automotive, technology, manufacturing, e-commerce, resource, energy, transportation, and health and wellness. And in those sectors, I've been involved in various items such as the initial public offerings, reverse takeovers, corporate accounting, capital funding, IR, governance, regulatory, ESG, and ERP, and much more. So in today's presentation, we'll be doing a company overview. We'll be talking about the Solo Drive, the evolution of the Solo, why the Solo is purpose-built for the urban driving environment. We'll look at a true cost of ownership comparison. We'll look at the shifts in transportation behavior, the growing EV and rideshare market, what the Solo ecosystem is all about, and how we do the direct-to-consumer as well as the commercial fleet applications, our asset-light manufacturing model, as well as our marketing strategy, our path to profitability, and our company stock and financials. So with that, we've got our forward-looking disclaimers. And so in terms of our company overview, we are evolving transportation with Solo from urban commuting, delivery, and shared mobility. We're changing transportation when it comes to single occupants. We're quite unique and dynamic in 3 distinct ways from our peers and others in the sector when it comes to our flagship single-seat, 3-wheeled Solo, and the Solo ecosystem that we've created and are embracing. 3 ways that we're dynamic and unique. One is our product, the Solo in itself. It provides an exciting driving experience. It's unique, it's friendly, it's trendy, and it's purpose-built. Secondly, our product is unique and dynamic because we have an asset-light manufacturing model. That's being done in 2 ways. One, with our strategic partner, Zhongshan, who is based out of Chongqing, China, who's also known as one of the largest motorcycle manufacturers worldwide. So they truly understand mass-scale production and scalability. The second aspect to our asset-light manufacturing model is that we've got we broke ground in Mesa, Arizona in May, where we're going to have our U.S. assembly and engineering facility, which is currently under production. Third way how we're unique and dynamic is how we're launching the Solo through a detailed marketing and advertising plan through opening up kiosk retail stores as well. We have a highly experienced management team with significant beneficial ownership of just under 16%. And we've got headquarters in Vancouver, Canada, but we also have other locations as well, such as Studio City, LA, Mesa, Arizona, and as well as Chongqing, China. We currently have 5 wholly owned subsidiaries, 3 U.S. subsidiaries, 1 Canadian subsidiary, and 1 wholly owned foreign entity in Chongqing called EMD Automotive Technology. In terms of what Solo Drive is, if we think of 2 bookends, on your left-hand side is the micromobility, which is like your scooters and your bikes, which lack safety and protection features because you're exposed to the elements. And generally speaking, there's minimal technology integration and you're very limited in range. On the right-hand side of this slide is the passenger vehicle, which is quite expensive to own, as well as it's got an oversized powertrain for a majority of the uses that you're requiring for travel. And with that, you also need a level 2 or a level 3 charging infrastructure. Then in the middle is what you have called solo drive. This is a purpose-built solution not only for the modern urban environment, but also a purpose-built solution for commercial applications such as the fleets and delivery vehicles and the car share program. This is all about going towards a minimalist trend. This is also a great solution for those who don't want to take public transit anymore because of COVID-19 and want to take control of their own space. This is all about how we're creating the solo ecosystem. And in terms of how we've evolved with the solo, it started in 2015. So we made 64 prototypes of the solos, which were hand-built in ElectraMeccanica's Vancouver facility and were delivered to early adopters. These are in circulation for over 3 years, and the first one was actually birthed in September of 2017. Then in 2019, we built 60 pre-production solos that were manufactured by our strategic partner, Zhongshan. These were designed for further validation and testing. We now are at the production solos. As of June 30th of this year, we have produced 78 solos, where we began production in August of 2020. This is truly a monumental milestone for our company, where this was started as a vision and a dream in 2015, and now it's all become a reality. The solo itself is built for urban, purpose-built for urban driving challenges. And the reason is so much of what we do is solo, like going to the gym, grabbing a coffee, visiting a friend, running an errand, etc. The other aspect to this is that the average daily work commute is about 42 miles. We've done extensive research whereby 76% of the people commute by themselves on a daily basis, which means that 3 to 5 seats are generally left empty, and you have a lower operating cost than traditional vehicles, such as the cost of ownership chart, which is just on this next slide that we'll go through. So if you look at over a 5-year time frame, and you look at the cost comparison where we include insurance, maintenance, taxes, and some of the other expenses that are included, and you compare that across 4 other vehicles, such as the Mini, the Nissan Leaf, the Chevy Bolt, and the Tesla Model 3, the Solo is far premium over the other vehicles, ranging from anywhere of 40.7% to 99% less to own. So you can see that it is quite lucrative to own a Solo for the purposes of everyday travel by yourself versus some of the other vehicles that are out there. And that leads us to how there's shifts in transportation behaviors. A couple of stats here. Over 345,000 electric vehicles were sold in 2020. And then 140% year-over-year increase is what we're seeing in the micromobility usage. So there's a significant trend towards the behaviors in a positive way towards the electric vehicle space. The other aspect that we can take a look at as well is the growing electric vehicle and rideshare market. So some key stats that we can take a look at is, for example, in 2018, global electric vehicle sales totaled about 2.1 million. The U.S. increased sales of EVs, they're saying, by 81%, or will be increasing sales, by 81% by 2040. Bloomberg also predicts that by 2040, electric vehicles will account for about 30% of all new vehicle sales. We still have California as being the largest consumer of electric vehicles in the U.S. 50% of all the electric vehicle sales are still coming out of the state of California. The other aspect to also note is that the cost of the battery is a primary driver for the high cost of electric vehicles, but the battery cost is reducing over time. One last statistic to leave you guys with is that today's EVs account for 1.8% of the shared mobility fleet. This is looking to grow to 80% by 2040. So a fair amount of growth when it comes to the shared mobility sector here. You've been hearing me talk about the solo ecosystem all along, and by looking at this circle and this diagram here in the picture, is there's three segments of what make up the solo ecosystem. It's about revolutionizing and disrupting what transportation means for a single commuter, whether it's a consumer or a fleet or a shared mobility aspect. This is an all-embracing aspect of how the solo ecosystem works in three market segments, two of which are commercial. So the one first market segment that we look at is solo drive, which is for daily commuting for urban drivers and commuters. The second part of this ecosystem is the solo utility, which is generally considered for commercial fleets. It's for deliveries and other utility applications. So, for example, you can use this for something like Uber Eats. You can use it for parcel deliveries, for mail. You can use it for food deliveries, various aspects that the solo utility vehicle could be used for. The third market segment that we're looking at is the shared mobility aspect, which is like your zip car, your car to go. You can use it in universities. You can have a pod-to-pod within cities. It could be used at hotels and tech campuses and so forth. So this is what we call the solo ecosystem for transportation, in particular for single occupants, which is a very holistic approach in terms of the way that we look at transportation on a daily basis. In terms of the consumer side, what we've done is we've also been doing a direct-to-consumer aspect. We've got 5 states that we're now in. So we're in Washington, Oregon, California, Arizona, and Colorado. We've set up kiosks in all 5 of those states, and we're aggressively continuing to look at setting up more retail kiosks. Right now, our focus is on the West Coast before we move over into the rest of the country as well. In terms of a couple of pictures of what our fleet would look like, the fleet applications, here you can see that one of the vehicles, the red one, has a bigger trunk in the back where you open up. That's for having a larger amount of product or packages that could be put into for delivering for food or for other small parcels or for post or whatever the case may be. The solo fleet up top in the diagram, as you can see, would be used for a utility version or for security patrol or any other service that that a company would need and would not need the bigger trunk in the back. The other thing to note is that global EV fleets will grow by $8.5 million in 2020 to about $116 million by 2030. The other aspect that we haven't, that we lightly touched on was the asset-light manufacturing model, where we've got two parts to this. One being our manufacturer Zhongshan in China, and who's also our strategic partner. They're known to be China's top manufacturer of 2- and 3-wheeled vehicles. They produce over 2 million units annually across 130 models. They've got over 50 joint ventures and global brands. And also, more importantly, one of the reasons of having an asset-light manufacturing model is mitigating against production risk and reducing our CapEx. The second aspect of our asset-light manufacturing model is our U.S. assembly facility and engineering technical center. It's a state-of-the-art engineering technical center that we're in the process of building. It's going to be a light vehicle assembly facility, and it's going to be the hub for our Solo Share ecosystem pilot program. Currently, construction is underway in Mesa, Arizona, and we're currently ramping up on the engineering, the processing, and the delivery employees at our PDI facility that we currently have leased in Mesa, Arizona. In terms of our marketing strategy and what we're doing on that front is that we're rolling it out through an integrated brand identity that reflects a forward-thinking, dynamic, growth-oriented electric vehicle company. We've got ongoing campaigns that include building awareness through digital marketing, influencers, we've revamped our website, we've got billboards out there, we've got print, traditional media advertisements as well. Path to profitability. So we're looking at our path to profitability in 3 distinct ways. The first one is to scale production and establish the Solo ecosystem. So we're going to be ramping up volume with Zhongshan, and we're going to also be beginning customer deliveries in the second half of this year. We're also establishing a direct-to-consumer retail locations across the country, beginning with high-value, eco-friendly markets, which we just saw in the previous slides. We're also aligning ourselves with fleet customers to form strategic alliances and generate partnerships in new regions. In particular, we're starting the programs in Mesa, Arizona first. The second way we're looking at path to profitability is to improve cost structure and evolving the product line. This is being done by streamlining operations going forward to reduce our bill of material and for future production lines to recoup overhead costs as production volumes increase. The other part about this is leveraging our buying power through suppliers to improve our cost basis, and we're also going to be introducing the next global version of the Solo to meet the emerging market demand. A third aspect of our path to profitability is to have U.S.-based operations. This is through improving capacity by assembling knockdown kits from Zhongshan. We're going to be creating logistical efficiencies and reducing supply chain risk. This will also enhance manufacturing and automate our capabilities further. We'll also be creating new jobs, injecting cash into the economy, and increasing the GDP. We're working continually with the state and the municipalities in the various levels as we carry out our business plan directives. We now have our company stock and financials. So at the end of Q2, which were June 30th, which we released the results last week on August the 11th, we had cash on hand of over $250 million. We had issued and outstanding at that time of 113.5 million shares. with fully diluted around 138.7 million shares. Our market cap currently is under $500 million. We currently have just over 205 employees. We've done everything to date with zero debt, so we're quite proud to say that. We've got beneficial ownership of just under 16%, and over this past year, we've worked very aggressively to be able to de-risk the company with a stronger balance sheet as we execute on our business initiatives going forward. And lastly, I'd like to leave you guys with some key takeaways on ElectraMeccanica. We are disrupting and redefining commuting in every aspect for a single occupant, from commuting to fleets. We are the future and the new wave of transportation. We're dynamic in our product. We've got the Solo that's purpose-built, single-seat electric vehicle that's trendy and fun. It's there to resolve urban driving challenges. And again, we've got an all-encompassing Solo ecosystem that serves Solo Drive, Solo Utility, and Solo Share. It's a full circle from commuters to commercial applications. We have an asset-light model where we've got a product launch where the deliveries of the Solo are soon to be planned in the latter half of this year, and starting with California first as the customers. So we've got strong macroeconomic tailwinds with a large and rapidly growing EV market. We've got a highly experienced management team, and we're now shifting the dynamic of the company from a pre-production, pre-revenue to a production and revenue-based company, with the Solos now coming to customers in the very near term. In closing, I would like to thank you all for joining me today, and please stay safe and healthy. Thank you.
Ladies and gentlemen, that does conclude the ElectraMeccanica presentation. Thank you for joining us. You may now disconnect.